Good morning, students. Today we discuss about 12th day accountancy, second chapter. In this morning video, we discuss about the new chapter, that is chapter number 2, accounts of not-for-profit organization. So it is one of the accounting dealings with those business concern which are not making profit. So those organizations which are run on service basis. So that organization will also have some of the financial transactions, and that financial transaction should be recorded properly, and mostly they cannot run the business, run the organization not for a profit motive, only for a service motive, but they are also having some revenues and payments, that is receipts and payments. So in that business point of view, business organization, mostly all the professional peoples, they will run this type of organization, that is not for profit organization. So they can have some financial transaction, that is they will have some receipts type of transaction, and they will have some payment type of transactions. So all receipt transactions and all payment transaction, whether it can be a current year or previous year or subsequent years, that can be recorded in a bookkeeping, and they will also eager to find out profit or loss, that is not for profit or loss. Because of this organization is not for profit organization, they will know whether they are earning some surplus or deficit. Mostly this type of not for profit organization will have deficit. Sometime only they will have some surplus based upon the income and expenditure from the receipt and payment. They will have some surplus or deficit. So all the not for profit organization, that is charities, youth associations, hospitals, club, and some of the institutions, whether it may be education institutions or it may be a tutorial concern, any not for profit motive organization will be comes under this category, not for profit organization. So in this not for profit organization, they will maintain some records. First we discuss about the features of not for profit organization, that is features point of view. The first point is not for profit organization or the organization which function without any profit motive. So this type of organization will function not for a profit motive. Mostly the first motive is to render services. The second motive only they will ready to know whether surplus or a deficit. Their main aim is to provide a service to a specific group on or the public at large. So this type of organization, that is not for profit organization, their main motive is not to earn profit. They are rendering services to the group of people or to the public at large. Generally they do not undertake business or trading activities. So mostly this type of organization will not undertake a business, that is a production business or trading business. They will have only an organization not to render service. Their main source of income include subscription from members, donations, grant in aid, and legacies. So their main source, the not-for-profit organization concerned main source is they will collect some subscription from the members, whether monthly wise or life membership fees, and donation also they will collect, and they will borrow money from finance institutions, and also they will have some legacies from the person in order to expand or develop the organization. So mostly at the end of the year, at the end of the academic year, they will prepare a final account. So their final account will be of in three stages, that is receipts and payments account, and then income and expenditure account, and balance sheet. So there are three stages of final accounts of not-for-profit organization, that is receipt and payment account, income and expenditure account, and balance sheet. These are the three stages of a final account of not-for-profit organization. So first we discuss about how they will prepare the receipt and payment account. How the not-for-profit organization will prepare receipt and payment account. So this type of final account, first stage of final account of not-for-profit organization is receipt and payment account. So receipt and payment account is a summary of cash and bank transaction of the organization. So this type of account will be prepared by the not-for-profit organization. They will take all cash and bank transaction, whether it may be a receipt or it may be a payment. All cash and bank transaction of the organization will be taken. So prepare at the end of the each financial year. So it can be prepared at the end of the each financial year. It is one of the real account. Receipt and payment account is one of the real account, and the receipts and payments account begins with the opening balance of cash and the opening balance of a bank, and also it will ends with closing cash balance and closing bank balance. All cash receipts are shown on the debit side, and all cash payments are shown on the credit side of his account. So in this account, receipt and payment account, all cash incomings, first it will commence with the opening balance on debit side, that is left side of your account notebook, and followed by in the debit side all cash incomings, all cash receipts, whether it may be a current year, it may be a previous year, or it may be a subsequent year. So all cash receipts should be debited, and all cash payments, whether it may be a current year payment, or it may be a previous year payment, or it may be a subsequent year, that is next year payment, all payment made during the year, that can be recorded in the credit side, that is right side of the receipt and payment account. So they may relate to the current year or previous year or subsequent years. It means irrespective of period for which the amount is received or paid. So it is received if cash received or paid during the year. So in current year, what all the receipts of the business organization that can be debited, whether it may be previous or current or next year. And also all the payments, cash payments, that also should be taken to credit side of receipt and payment account. So in this receipt and payment account, don't take outstanding income or outstanding expenses some financial expenses that should not be taken to resident payment account. That is loss of any financial assets, depreciation. So all these items should not be taken to resident payment account. And also credit transaction. If there is any credit transaction, they will not record, because of credit transaction is not possible. They are doing only service motive business. They are running an organization, not a business, not a trading business, not a production business. So there is no chance for a credit transaction. Only cash transaction will happening in this type of a organization. So they will record all cash receipts on one side, that is debit side, all cash payments on the credit side, that is right side, they will record. And there are various steps to be followed while preparing resident payment account. There are various steps to be followed. That is, first one is record the opening balance of cash in hand and a favorable balance, bank balance on the debit side. First you should record the cash balance and also favorable bank balance. That should be recorded in the debit side, that is receipt side, that is left side. If there is any bank overdraft, it must be recorded in the credit side, that is right side, that is payment side. If there is any bank overdraft balance, opening balance. And actual cash receipts during the year are recorded on the debit side. That is all cash receipts during the year, not only current year. If previous year amount is received current year, means that also should be recorded. Otherwise, if next year amount will be received during the year, means that also should be recorded. So all cash receipts during the year, that should be recorded on the debit side, that is receipt side, that is left side of your account notebook. And actual cash payments during the year, whether it may be previous or current year or next year, that should be recorded in the credit side, that is right side, that is payment side in the receipt and payment account. And while recording cash receipts and cash payments, no distinction needs to be made between revenue and capital items. So while recording the cash receipts and the cash payments, you should not find out the difference, whether it may be a revenue or capital nature. That should be recorded in the receipt and payment account. Likewise, the payment also, whether it may be capital or revenue, all payment, cash payment should be recorded. If the total of the debit side is more than the credit side, the balancing figure will appear on the credit side. It represents closing cash balance or bank balance. Suppose if receipt is more than the payment, means the balance will arise in the payment side, that is the credit side. That balance may be assumed as whether cash in hand or cash at a bank, that is closing cash in hand or closing cash at a bank. And if the total of the credit side is more than the debit side, means the balance will appear on the debit side, that is assumed as bank overdraft. We can draw over the amount in our account. So these are some of the procedures to be followed while preparing receipt and payment accounts. So with that, we conclude this video. We can continue the same chapter in next video. Thank you.